Hello, everyone, and happy holidays. This is Matthew Frailey, founder of BreakpointTrades.com. Hope you all had a nice weekend and a good Thanksgiving. Anyway, it is December 2nd, and I'm going to do a comprehensive technical analysis discussion on the markets and, of course, our trading systems. By the way, we have a Black Friday special going on, Cyber Monday today. It's still valid for the rest of the week. You get 20% off a subscription as well as 2 extra months. So it's a good deal. Use Black Friday 24, all caps. All right. And you can get the deal. Again, just go to the enroll page on the website. This is good for our half-year KISS subscription and our regular 6-month subscription. Okay. All right. Let's go and get back to this detailed market newsletter video at hand. By the way, this is our back-end recorder for our website subscription service. I'm going to get that recorded started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, December 2nd newsletter. Hope everyone had a nice weekend. As you know, Steve Nelson did the extensive weekend newsletter. By the way, his wife is having knee surgery today, so he left early. And just heard back from Steve. She's doing very well, but obviously she has recovery now. Anyway, again, this newsletter is divided into 6 major sections. Quite honestly, not a lot changed on the market today. We continue to have further upside, and obviously all the trends remain up: long-term, short-term, intermediate term. Today, the big cap tech led. Okay, and news items this week: ADP tomorrow, Tuesday, Wednesday, S&P Global PMI, ISM, crude oil inventories, Thursday, initial jobless claims, and Friday, of course, is the non-farm job payroll report. So we'll see how that comes in. And, otherwise, this newsletter is the same theme as we always keep. Have our opening discussion on the market, which I'm doing now. Then we're going to look at some of our systems. We still have an open long on the SPY breakout. Every day the stop continues to be raised on that smart trailing stop, so I'll go over that. Talk about the KISS subscription. Again, we are still running this special. Okay. Use Black Friday 24, all caps, to receive 20% off the KISS subscription plus an additional 2 months for a total of 8 months. Works out to a 40% discount. Again, after that, we'll get to the general market newsletter, look at a couple indicators, sectors, currencies, crypto, precious metals, and trade ideas. By the way, I added some nice new trade ideas tonight for my volume scanner, and we'll go over those at the end. Anyway, let's get started. So first image below, item number 2. So here's the current SPY mean reversion systems that have been sent out this year to our subscribers. Okay, 25 of them so far. The mean reversion systems have been sort of quiet this year because the market's had a nice uptrend. There's a lot more trades in volatile years. 2022 they did almost 100 trades. But still 25 trades. Vast majority of these are winners. We still have this open breakout system that went long. It took a first and second entry. First went long on November 7th, and then it took a second entry on November 15th. Last week, we had a scale out where the system scaled out at 50%. We still have 50% of the position. The current stop today, it moved up. It was 589 last Friday. It moved up to 590.39 today for the first entry, which again is above entry. And actually, it's right around entry. And then the second entry for the SSO moved up to 94.7. Okay, so this trade is still open with stops in place, and profits are already locked in. Half the profits last week. You can see the trade right here. Next, let's talk about the KISS systems, guys, because with our Black Friday deal, there's quite a few of you who didn't have the KISS system subscription, added it over the weekend, and I hope you like what you get. But here's an example, and just showing you guys and this is from a subscriber, 483, not going to mention his name, but this is what he received. This is what he received today in his email as an update to his favorites. So first off, he has a lot of favorites, obviously, but these are the ones that had new changes today. And look at these gains here. Red here, VTR, one of his favorites, closed out, but it closed out with a 33.2% gain. If he was in that trade, awesome trade, obviously. CCL's up 53.5%, but look at all these nice gains here. There's a small loser here down 1.1%, but these are real, guys. These aren't back tested. These are from his favorites, and likely he's in. Maybe he's not in all of these, but if he's in at least several of these or half of these, he's done damn well. So that's just an example, and this isn't the high performance. This is just the standard KISS systems, but just an example of, a real email to one of their KISS subscribers. Pretty amazing gains here. Anyway, let's get back to the newsletter at hand. So item number 4 shows the index sector table, what transpired today. So you can see a little bifurcation on the major indexes. The Dow, Russell were slightly down, with the S&P and NASDAQ up, and clearly the NASDAQ big cap tech, as already stated, led up anywhere from 1 to 1.1%. Moving down to the market sectors, we follow 21 of them here. About a 50-50 mix of up and down, as you can see here today. And as far as currencies, US dollar rebounded a little bit, up 0.6%. Bitcoin down today, 1.9%. I'll talk about that later below. Commodities, mostly to the downside. The only exception here I see is copper, up about 0.3%, but all the commodities were down. DBC, the index, down 0.7%. Crude oil down 0.8%. Natural gas down 3.8%. Uranium, agriculture, corn, wheat, coffee, you name it, and precious metals all taking a haircut. We've been looking for a lower high in gold anyway, so we're seeing that sell off, and the stocks, the miners, are leading. So I still think we have further correction in the gold market, but I welcome it because I view it as a long-term buying opportunity once it's complete. As far as the bond market, little bifurcation here, slight update on the 10-year, slight down year on the 30-year. And interesting, the yield curve has fallen all the way back to 1.0. So we'll see if it goes back to an inverted state or not. It's right on the edge. Next. Item number 5 shows the economic news calendar, which I already discussed. The big item for the week is, of course, the jobs report on Friday. Now, again, there's various other things here. ISM, PMI, etc. But the big one for the week is the jobs report. All right, let's go and jump to the charts. First chart below, item number 6, we're just going to look at the big cap tech stocks because we've been following these. And we stated that they needed to lead, and they did lead today. So we'll see if that continues. Here's Microsoft. It's been in this coil-like formation. Broke out, took out a little resistance here at 428. Bigger resistance, of course, is the downtrend line. Image number 7, here's Meta. Had a nice day. Took out this resistance right around 580 and got a little resistance trend line just above. Honestly, chart looks pretty decent. And the big boy, NVIDIA. Now, NVIDIA is bouncing back here a little bit, but it still is precarious. It lost this channel last week. It did find some initial support right around its 50-day moving average here in red. It's bouncing here, but remember in technical analysis, when you break a trend line, it becomes resistance. So this is now theoretically resistance where this could stall out. We'll see. If that does, and it starts another decline, the next supports would be this uptrend line via the dotted line and your bigger demand zone below, and of course your 200-day moving average. Next. Moving back to the major indexes, so chart number 9, here's a daily snapshot of the 5 key major indexes. So again, like I said, little bifurcation. Dow and the Russell were slightly down. The tech, big cap tech area, NASDAQ clearly leading. Next, chart number 10, here's the S&P 500 high performance daily KISS system. Obviously no changes. Smart trailing stop is still around 57.95 or 5,800 if you wanted to round it up. System's done a bang up job. You can see where it went long on October 31st, 2023. Right off that bottom, held it until April, got out, got back in May, got out in July, got back in a little bit lower after that August correction, and it's been in ever since. Next, Image number 11, here's the 4 time frames. Again, not a lot to say here. The one thing I want to point out here, we have a DeMark 913 combo on the half day. Yeah, it didn't matter much today, but that is an important thing to realize. Notice all these A's too. This is what we call amateur buying. And a lot of times you get these near tops. Not always, but basically what it indicates is lower volume with price going up. And so we're getting a lot of these A's now. We have the Mark 913, etc. So we'll see. Obviously, we have support on the ATR on all the time frames. We also have a DeMark 9 on the 78-minute. Next, moving back to the standard charts, here's the weekly S&P. Okay, we'll see how this fares this week. Otherwise, you can see the uptrend channel that it's been in for quite a long time. Next, chart number 13. Here's a very clean daily S&P chart. Back in July, August, we had that perfect three-wave ABC pullback. As you know, KISS system went back long after that. And you can just see, we've just been uptrending since. This uptrend line here is your main support and the 50-day moving average. So really no changes, just keeping it simple there. Next, chart number 14. Here's another daily chart. Now this would show you the most bullish view of a nested 1 2 1 2. But again, for this, and we would be working on a wave 3. But for this to play out, price needs to strongly move higher here because you would be theoretically in the wave 3 here of 5. So again, we'll see both. There's various scenarios. That is one option. Next, chart number 15. Here's yet another option Steve discussed on the weekend. Again, we're viewing right now the nested 1 2 1 2 is the alternate, which you see here in green. Okay. Otherwise, here's what Steve is more favoring right now, kind of a 1 2. We're in a little 3 now. Soon, if this is the correct count, we should get a little 4 pullback, but then another move higher in a 5, potentially of C, and then that would mark maybe a little better top. Okay. These are your key pivot levels, these higher lows. First higher low is 58.53. Next, chart number 16. Here's a 2-hour view Steve showed on the weekend, kind of a potential wedge type formation here. Again, it's not a proper wedge yet. There's not enough wiggles in here, but just something to be aware of. And if we do get a nice correction, eventually we get a big unfilled gap below here. That would be a magnet. Next, chart number 17. Here's the 60-minute chart Steve discussed on the weekend. So this is one of these ending diagonal options where you have a wave 1, 2, 3. And if this is the correct count, this should start pulling back soon, sort of maybe a 3-wave ABC pullback for a wave 4. Then you get another rally up to a new high in a wave 5. All right, now if we just start launching up here, then this would be negated, but this is still a valid option. And guys, should the market decide to have a pullback here, oftentimes the week after Thanksgiving is weak. Now today wasn't, but we still have 4 days left. Here's SPXU. That's the triple inverse ETF for the S&P. Got kind of like a wedge pattern here with some MACD divergence. So that's a hedging instrument if you choose so. Oh, and one more chart. That got out of order. So chart number 19. Here's a 60-minute chart. Again, here's another example of just some potential wave counts. This would be your bullish view where you're working on this wave 5. Chart number 20, here's a 30-minute chart, just showing some fibs. Should we pull back from here, and a uptrend line here to monitor. And finally, chart number 21, here's a 15-minute view. Steve noted this on the weekend. We had to break a structure. This is your next demand zone. Otherwise, here's an uptrend line to monitor should we get a pullback right from here. Moving on, chart number 22. Here's the NASDAQ, triple Q's, high performance KISS system. Again, no changes here. Smart trailing stop is still around 492, right around that ATR. Next, chart number 23. Here's the 4 time frames. So one thing to note here, and this would be possibly one for the bulls. I've been talking about this half-day time frame with the cycles. Price has been really ping-ponging well between these cycles. That said, we did pop above this resistance cycle, so that's possible a breakout if it holds. If this holds, that could be bullish, leading to more upside, but we'll see. ATR is your support on all the time frames, obviously. Next, chart 24, here's the triple Q's standard chart. This is just the weekly chart, or no, it's a daily chart, I'm sorry. Just showing the uptrend here. Possible wedge type formation. You can see we took out a little resistance level here, but monitoring this wedge over time. Chart 25, here's another daily chart. Next, chart 26, here's a 60-minute time frame. This is your little supply zone. We got a little bit above it today. And chart 27, here's a 30-minute view. Finally, chart 28, here's IWM. That's Russell 2000. Little slight pullback today. Again, this has been a great trade, though. The ascending triangle, just absolute textbook. You broke out of the ascending triangle. You pulled back. You back tested previous resistance, which became support. That's a tentative technical analysis. That was a great buying opportunity if you missed the breakout. And it made a new high. There is a little divergence setting up for the moment, but again, we're still above even the 9 EMA at this point. And chart 29, here's a 2-hour view, just pointing out there is a potential little coil setting up here. So we'll see which way this resolves tomorrow. Futures are up just a few points tonight. This coil, if correct, would likely lead to an upside break. And as you know, small caps tend to do well late in the year. All right, so that does it for the major indexes, guys. Let's go and move on. Chart 30, here's the VIX. Not a lot to say here. VIX just continues to work lower. Last time the bounce stalled at this middle Bollinger Bands. Otherwise, you can see the VIX Bollinger Band buy and sell signals this year. There's been one sell signal, which did give a trade, and a lot of buy signals, which all gave trades as well. Next, chart 31, here's a 60-minute chart of the VIX. Remember, it really loves to fill these gaps. You can see all these filled gaps now. It is working lower. We have a little MACD divergence to monitor here, but otherwise, not a lot to say about that. Next, moving to the bond market, chart 32, here's the 10-year Treasury yield. Slight update today. You can see nice correction over the last couple weeks, but it's at a support zone right around this rising 50-day moving average, 200-day. So we'll see if it finds some initial support here or not. Next, chart 33, here's TLT 20-year bonds. Nice rally off that divergent low. You had a nice MACD divergence there. And a little resistance, which we took out last week. You can see we're right around the 38% fib retracement. Next, chart 34, here's TMF. That's the leveraged play on TLT. It's the triple long ETF. I had posted this a couple weeks ago that I went long. And I pointed out that I could count 5 clear waves to the downside with MACD divergence. Remember, whenever you have 5 waves, you should always have MACD divergence. If you ever count 5 waves and you don't have MACD divergence, likely you're in a wave 3, not a wave 5. Okay, which is one thing I've learned. I don't know if that's discussed in technical analysis books, but it's one thing I've learned and one thing I'm teaching you. But anyway, nice rally from there. Congrats to anyone who went long. Now you got to decide if you want to take some profits. Again, around these major moving averages could be an area for this to at least pause, but it's been a nice trade out of there. And chart 35, here's that 2-hour view of TMF. You had this nice bottoming triangle pattern. Price gapped out of that pattern. That's what you call a breakaway gap. So that was bullish. I bought it inside the pattern, but you could have also bought the gap out of the pattern. And finally, chart 36, here's HYG, high yield corporate. You know, this has been making new highs, little pullback today. All right, moving on, just review the market sectors real quick. Here's XLK technology. Again, very similar look to the triple Qs, kind of wedging higher. Chart 38 here is semiconductors. Remember we said they've been lagging. They needed to lead. They did hold this demand zone for now, bouncing up, now retesting this little broken trend line. Bulls really need to get price above this now and above the 50-day moving average, quite honestly. Next, chart 39, transports. They continue to do well. Little pullback today, but bouncing right off that 9 EMA. Bigger support is below. Chart 40 here is XLF financials. Financials, banks were a little weak today. Again, this sector's had a heck of a run. It's quite overbought, so I'm not surprised. Tested this 9 EMA, holding it for now. Now, if it loses that, then likely we'll at least test the 20, if not the 50. Here's the bank sector. Remember this ascending triangle I pointed out a couple months ago. Played out beautifully. Anyway, nice pullback here. Now the banks have some MACD and RSI divergence, so this looks a little more vulnerable. Again, it's quite extended, quite overbought, so a correction here would not be shocking. Next, chart number 42, XRT retail. This got into the supply zone last week, and it's still holding up into here. I heard Black Friday sales were about 10% above last year's sales. Chart number 43, XLP consumer staples. Remember we showed this wedge pattern into support, was previous resistance became support. There's a little resistance right around the 83.30 here. We'll see if it can take that out. Chart number 44, biotech. So far, again, nice bounce back. Struggling a little bit at the 61 fib here, to be expected. Chart number 45, IYR real estate, pulling back here. Now it's testing the broken downtrend line here. This pattern, we'll see if it holds there or not. And chart number 46, XLE Energy. This area has been a little weaker, but again, not shocking, guys. XLE was at the top of this range going back to April. So pulling back. The question is will it form a higher low? I think it will, but we'll see how far it pulls back. If it loses this 20-day moving average, likely it'll at least test its 50-day here, maybe the 200-day. And notice there's an open gap here, but XLE is holding up much better than crude oil itself. Chart number 47, here's the weekly. You can see the pullback tested the broken weekly trend line, bounced off of it for now. Let's move on to commodities. Chart number 48. Again, all the commodities were down today except for copper. So DBC, that's the index. Again, it's in the downtrend channel here. You can see stopped at that downtrend channel line just over a week ago. Pulling back here, continues. Chart number 49, there's the bigger picture view. Still in this big pattern that it's been in here for a couple of years now. Chart number 50, here's crude oil. Little weakness today. Here I drew a diamond last week, so that appears to be the pattern. Still mostly intact, so we'll see which way this one breaks. Next. Chart number 51, UNG, natural gas, pulling back. Remember, this 200-day moving average, it's been failing there for the last year and a half. So if you've been long, that's always been the area to take your profits. Okay, it was a nice trade out of this wedge, but hopefully you took your profits there at the 200-day. Next, chart number 52, DBA agriculture, also pulling back again. It's had a pretty nice run here after that ABC three-wave pullback, was up near some resistance. So logical area to pull back. Now we'll see form a higher low. Again, you got a lot of support at these moving averages, so I'd expect that. And chart number 53, here's coffee. This is the monthly chart finally pulling back here, but just showing you this because this is a 45-year chart going back to 1980, and coffee did exceed its all-time high. Don't tell Starbucks, they'll use that as a reason to raise prices, which are already too goddamn high. Right? $6, $7 for lattes. I mean, come on, ridiculous. But everything's ridiculous these days, isn't it, guys? Anyway, chart number 54, Bitcoin pulling back here. Again, I still think it's going to hit 100,000. It really got close. It got about 200 points away, right? 98,000 or 99,800. You could argue it's close enough for government work, but I still think it needs to at least tag or exceed the 100,000 mark. But one pattern I'm watching here is a potential little A, B, lower high, then another pullback in a C, and then I think it attempts new highs. Okay, so this could be a lower high B with a C decline coming, guys. Be aware. Next, chart number 55, there's the weekly view of Bitcoin, of course. Again, we identified that fourth wave pullback into the weekly demand zone back in July, and that was a great call. Okay, still hasn't officially tested the 100,000 area, but I think it will, like I just pointed out. Chart number 56, here's IBIT, one of the Bitcoin ETFs. Should Bitcoin be in this little ABC correction, I'd expect this to pull back, maybe even test its 20-day moving average. Next, chart number 57, here's US dollar. Again, up today. Nice pullback though over the last week or so. But here you can see this steep uptrend channel line that For now, monitor that as your support. Obviously, the dollar had one heck of a rally out of this fifth wave low. Again, you can see you had a wave 5, MACD divergence. Remember my comments there. Wave 5s always have MACD divergence, always, okay? It's kind of like a law of nature. And you had a wedge pattern. Next, chart 58, here's UUP, US dollar ETF. Last week I pointed out that spinning top doji as a little topping formation, and it produced a nice pullback to the 20-day anyway, a little bounce back today. Chart 59, there's the weekly chart of the dollar, of course. Why did it rally so much? Well, it had long-term support here. You can see where it rallied off over the last couple months. Next, chart 60, here's FXY. That's the Japanese yen ETF. So here's another example of a fifth wave decline. I pointed out this fifth wave bottom a couple weeks ago. Again, MACD divergence. Remember, wave 5s always have MACD divergence. Went long. I talked about this being a swing stop here. It's been a nice trade so far. Moving to precious metals, chart 61, gold down 0.84% today. Again, we've been expecting a lower high, which we got. Right now, we'll see if that's a wave B and we get a decline in a wave C. That would be what I would favor. If we get that, I think that'll be a good buying opportunity, especially if it comes in right around the 200-day moving average. Next, chart 62, here's another chart of gold that shows this wave count breakdown that we've been showing. We counted that last high as a wave 3 of 5, A, B, and maybe we're now in this wave C decline. That would be a major wave 4 once complete. Then I'd expect new all-time highs in a wave 5. I'd expect gold to exceed $3,000 at that point. Chart 63, UGL, that's the Ultra Gold ETF. Notice how that stalled perfectly. That bounce right at the 61.8 fib. Remember, we gave a long idea back here. We thought it was a bounce trade, but we said look to sell it. That was a great opportunity to sell it at the 61 fib. Chart 64, there's the weekly view of gold. Okay. Hell of a rally, though, over the last year out of this long-term base. Next, chart 65, silver, down about 0.8% today. Still above its 200-day moving average for now. Long term, of course, I think silver goes much higher, but so far, logical stall at this supply zone. Again, once this correction's over, I expect silver to eventually go to these upper levels. And speaking of the mining stocks, GDX pulling back here, down 2.2% today. You can see the last bounced logically off the 200-day moving average, 50% fib, but we were clear. We expected a lower high. Notice it filled the gap, stalled at the 20-day moving average, and now it's pulling back again. All right, guys, let's move to the final part of this newsletter, our trade ideas. So first off, we'll go over some recent ideas. Here's ECVT. Big pop today on monster volume. Honestly, this one looks like it could follow through on momentum. My next target would be filling this gap up here, the second gap. Again, we had it as a long idea back here in October off of this bottom. It had a heck of a trade. First target was that filling that gap. And then once it consolidated here, I said it still looked good for another trade. Finally popping today if you've been patient. Still looks really good here. Chart 69, UNFI was a beautiful coil pattern. Popped out a couple weeks ago. If you've been patient, you've been rewarded. Just trail the stop now below the 9 EMA, right around 24 now. Chart 70, JVA, it's a coffee stock, pulling back today, but today, if you still had some shares coming into the day, it hit 460. It's been a nice trade out of this pattern. Next, chart 71, Rocket Lab, which we had as a long idea way back in August and September and October. And boy, this has been a runner. But look at today, finally getting a pullback. This was going parabolic and sustainable. So still above the 9 EMA, but not surprising to see a haircut finally in this one. Next, chart 72, Datadog was a great idea, long idea of ours a couple weeks ago. Still sort of flagging here potentially, but go doggy, as it says. Chart 73, AFRM, weekly chart. Really nice break out of this base. Finally pulling back here a little bit. Remember, this base is now long-term support. Should it pull back to there? Chart 74, here's another weekly chart, BLND, one I'm monitoring. Let's come out of this long saucer bottom weekly chart. Here's your supply zone up here. That could be a target over time. Chart 75 comp broke out last week. Today pulled back, retested previous resistance, became support. Chart 76 PLL, one long idea from last week. It never triggered. It's kind of a boring play here. It's still valid. It needs to break this downtrend line. Looking at some new setups, here's SMCI. This thing has been absolutely destroyed, but today some news came out in the morning where investigated finds they're innocent of all charges. Their accounting firm had resigned, so the stock got absolutely killed. But after that news in the morning, the stock started to pop. Chart 78, here's the weekly chart. Again, you can see how SMCI was destroyed. First off, it went from a darling, rallying out of this coil, going all the way to 122. So it went up 400%. Became a darling, then became a dog, right? But you can see, got it quite oversold here, then it's rallying back up. Here's some new setups, guys. For my volume scanner, these are longs, VERV. Nice base here, breaking out of a base on expanding volume, so a trigger would be over today's highs. Looks really good. I like these basing patterns. Chart 80, VSAT, nice flag pattern. You can see how the 50-day moving average mirrors resistance, so above today's highs, you can get a trade. Again, these are all standing out by the increase in volume. This is from my volume scan. Chart 81, EB. Ever bright, whatever. Anyway, little coil here setting up, resistance around 380. Again, nice pickup in volume. Chart 82, ALXO, nice break of this long trend line, good volume coming into it today. Closed above its 50-day moving average, looking for some follow through. Chart 83, VTLE, little flag pattern setting up. You can see the nice increase in volume today. Looks good. Chart 84, UIS, little breakout play here. Chart 85, Roku, nice big move up today, good volume. This has been a consolidation. We'll see if it can clear this trend line tomorrow or not. And the final chart, chart 86, Note. Nice volume today. I looked at a 60-minute chart. It still looks good, could be flagging. So over today's highs, over 110, could give you a trade. Again, I don't view this as a big swing trade. Maybe just gives you a quick trade. But there you go, guys. We'll see what happens tomorrow. Again, let me check on futures again here. ES futures are up 1 point, so futures are fairly flat. We'll see where things open tomorrow. Again, remember the Black Friday, Cyber Monday deal. Black Friday 24 is the code. Again, appreciate all the support. Take care. Have a good evening.